On the first path, you wake up on a Tuesday. The market has just dropped 4% before breakfast. You scramble to read the news. You fight the sick urge to sell everything. But on the other path, you are calmly drinking your coffee. Your wealth is being managed by cold, emotionless code. You have reached a crossroads. You must decide how to deploy your capital. Path A is the discretionary investor. You rely on human intuition. You react to macro news. You demand manual control. It offers a comforting illusion. You feel your hands firmly on the steering wheel. Path B is the systematic investor. You hand your financial agency over to math and preset parameters. There is initial friction. It feels deeply unnatural to trust a machine with your future. That discomfort is the price of entry. On the first path, you decide to work harder. You download 5 different finance apps. You start tracking yield curves and inflation prints. You follow financial influencers who speak in certainties. You feel highly productive. You are constantly absorbing information. But the reality is different. Your return on time invested plummets. Managing your money becomes an unpaid, high-stress second job. You feel plugged into the market. That adrenaline masks a silent drain on your psychological bandwidth. You are not building wealth, you are just consuming noise. You spend hours analyzing a single position. You convince yourself that effort equals alpha. That is a dangerous lie. On the other path, a sudden market correction tests your resolve. It is a Tuesday in mid-2026. Red numbers flood the screen. On the manual path, you freeze in analysis paralysis. You wait for a signal that never comes. You seek permission from the headlines to take action. But on the algorithmic path, there is only silence. The system simply reads the data. It unemotionally executes its predefined rules. It initiates a systematic dollar-cost average into the dip. It triggers an automated rebalancing protocol. There is no hesitation. There is no fear. There is no checking social media for reassurance. Human panic urges you to flee. The code unblinkingly executes the math. It does exactly what you told it to do when you were calm. Back on the first path, the market inevitably rebounds. You missed the exact bottom. You were waiting for confirmation that the dust had settled. Now frustration sets in. You experience the gambler's fallacy. You feel you are owed a return for your suffering. You take an oversized, impulsive risk to catch up. You abandon your original thesis. Cognitive biases take control. Fear of missing out overrides logic. Confirmation bias twists your perception of the data. You are no longer investing. You are reacting. You are fighting a war against your own psychology and losing. The market does not care about your feelings. It only punishes your lack of discipline. On the algorithmic path, we look under the hood. You did not need to learn complex programming. You utilized the democratization of algorithmic technology. You connected no-code execution bridges. You used secure API integrations. You deployed the exact same systematic discipline as institutional funds. Your wealth compounds quietly in the background. You never perform a single manual login. You do not check the pre-market futures. Systematic investing is often perceived as boring. That is by design. True wealth architecture should be invisible. It operates beneath the surface, relentless and precise. It requires no motivation. It never sleeps. On the manual path, 5 years pass. You have suffered severe decision fatigue. Perhaps your manual trades roughly matched the market, but the emotional tax has been devastating. You realize you have not built financial freedom. You have built a cage made of ticker symbols and financial anxiety. You hoarded your capital while bleeding out your time. You optimized for the highest possible return. You forgot to optimize for actual present-day peace. The cost of that mistake is measured in lost years. You missed dinners. You missed deep work. You traded your attention for a fraction of a percent. Both paths eventually reveal their final destination. The algorithmic path has not just outperformed mathematically. It succeeded by eliminating human behavioral errors. You have achieved actual wealth. You preserved your time. You protected your attention. You secured your peace of mind. In modern finance, the greatest advantage of an algorithm is not that it can predict the future. It cannot. The true edge is far more profound. It protects you from yourself. You built a system. You stepped away. You let the math do the heavy lifting. That is the ultimate return on investment. That is the architecture of freedom.